Hello, and welcome to Rocket Fuel, your daily update of everything that's happening in the Rocket Pool community. My name is Wack. Today is May 23rd. Happy ETF approval day, and today's episode is going to cover news about FIT21, the bill that was passed in the House yesterday. We're going to be talking about Ethereum ETF. We're going to be talking about Holesky and the bug fixes, and we're also going to be talking about some general Ethereum news. So let's get started.
10, 9, ignition sequence start, 6.
Okay, so we're going to start here with this news that came in yesterday morning. So Senator Cynthia Lummis said that there's bipartisan majority in both chambers of Congress in favor of crypto. The future is very bright. So she's obviously referring to the vote for the SAB 121 that passed last week. But I think she was also getting some news from her colleagues in Congress about how people are planning on voting in the different votes that are coming up and what's going on with those. Well, here, she was insinuating that the FIT21 vote that was in Congress yesterday, that was at the House yesterday, there was going to be Republicans, of course, voting for it because it's a Republican bill, but also that there would be Democrats who would be voting for it as well. Well, Brandon here said before the vote came through, the White House will not issue a veto threat against FIT for the 21st Century Act. The crypto market structure overall bill being voted on today flags concerns but no veto threat. This is a huge win for crypto backers on the Hill. So this idea was at the SAB 121 vote, when that was coming up to Congress, Biden and the executive branch said, we're going to veto this if this comes to us. So if it passes Congress, we're going to veto it. And people were really upset about that. And that actually was one of the sparks that have changed everything for these last few weeks, because that led to Trump saying that, hey, I'm supporting crypto, I'll be the crypto president, and then everything unraveled for the Democrats, and that bill still hasn't been vetoed, and it's likely that it will be actually approved. So with this one, they said, we don't want this, we don't like this, but we're going to work with Congress and we're going to try to make it work. But they didn't say we're going to veto it. So like Brandon here says, this is a huge shift in policy, huge shift in what we understood was happening, and that was really amazing. So the news was just coming in yesterday. People then started to talk about how that the Democrats aren't going to force the Democratic members of the House to vote against it, and there was no whip. Basically, that's what the whip means, and so they will not whip against the House Republicans crypto bill, and that actually gave the freedom for a lot of Democrats to be able to vote the way they wanted instead of being voted the way they were told by their party. So here Architect says that House Resolution 4763 is widely bullish for Coin. House Resolution 5403 is widely bullish for USDC. If both of these pass, you may as well make a date with your loved ones to celebrate $400 coin stock. So this is not necessarily about the coin stock. This actually should be this tweet from Eleanor talking about how there will be no whip for the vote. So everything was kind of getting set up for the vote to go pro crypto. Nancy Pelosi came out and said that she was going to be, the word came out that Nancy Pelosi would be voting in favor of this as well. Well, once the vote came up, Jake Chavinsky said that the FIT21 passes the House with 279 votes in favor of it, with 136 votes against it. So that number of House Democrats who voted for this were 71, and that's out of around 200 and 210 or so, 205. So basically a third of Democrats voted in line with the Republicans on this. So this was one of the strongest bipartisan bills that wasn't like a rubber stamp bill that's come through the House in a while, I think, which is absolutely amazing to see. Today it's going to go in front of the Senate, I think, so we'll have an idea of where it stands in the Senate. There were a few people who were saying that the bill will fail in the Senate, but now people are kind of putting doubt to that, so I'm not sure exactly what's going to happen with that, but we'll cover that in tomorrow's episode. Well, Paul Grewal here, who is the Coinbase chief legal officer, said 71 Democrats, let that sink in. 71 Democrats just joined the Republicans to defeat the scapegoating, fear-mongering and ignorance of fellow legislators who refuse to legislate. Thank you, Congress. FIT21 is real progress. And then here, Comfu.eth said, I stand with crypto. More than 600,000 people are already advocating for better crypto policy in America. Join the fight to receive email updates on crypto policy, invites to local events and more. So this 600,000 number, I think, of just people, who are stand for crypto, it's like a real alliance here. But there's millions of crypto holders in the US, right? And I think that what happened is the backlash against the SAB 121 veto threat, Trump saying, I want to be a crypto president and pro-crypto. And then I think internal polling came out, the Democrats were looking at about people willing to vote on crypto as a one, single party issue. And those numbers were actually way higher than they thought they would be. And because of that, I think all of those things together have led to this reversal in policy, and becoming a lot more tolerant, if not embracing, of crypto is definitely interesting. Adam Cochran has a take, and he says, there is all the proof you need that this isn't a fluke. The White House bailed on the veto and issued a statement in which they call for productive frameworks to promote digital assets and payment innovation in America. This isn't just about ETF or one vote. This is an entire change in messaging and strategy. I can't begin to tell you how big a deal this is. While Warren continues to fight, the White House has just given other Democrats a pass to now support crypto and blockchain innovation, and is backed off blocking by authority. Maybe the war isn't fully over, but like the Battle of Saratoga, in the Revolutionary War, this signals the beginning of the end. A major victory, a shifting of alliances, and the enemies without support or resupply. After decades of indecision, confusion, and chilling effects, blockchains in America will finally be open for business. And then Fubas actually kind of put a contrarian take here. He says, I don't think FIT21 is actually a win. It just shifts the agencies from the SEC to the CFTC. You still have all the same problems of crypto tokens not actually being commodities and not fitting into arcane commodity futures frameworks, just like they don't fit arcane security frameworks. So there were a few people actually who were kind of putting the brakes on this a little bit, and they were saying that this isn't necessarily that good a thing. I didn't really want to pull out that information, but I'm just letting you all know that there are some dissenting voices about just how useful this is or isn't. And Jasper actually had an amazing thread that has gone quite popular overnight. I was number 6 person to give it a like, and I was got 525, so good job, Jasper. He says, a short thread on the most important aspect of the FIT21 bill, the 5-pronged decentralization test to determine whether or not an asset is a digital commodity. Expect all protocols with goals of decentralizing to be paying very close attention to this test. And here's the text below. So he says there's a 5-pronged test. You can read the whole text of it, but there's 5 different prongs. The first one is the power rule. So and most of the things work over the previous 12 months, so you have basically a chance to become, he'll explain the terminology. So he says prong 1 has 2 subdivisions concerning the previous 12 months and about how people can change the code, and he then explains what people will be, and you can't prohibit others from using the system in any way. So here then it goes into ownership and voting. So there can be no person or affiliated person who can own 20% of the asset, and no person has the power to direct 20% of voting, and they must give up power. And then Jasper says prong 2 is really powerful. The 20% will impact a lot of protocols, and he says Rune, and Rune of course is the person who leads Maker, and I think he has more than 20% voting, and he has more than 20% of the tokens. So that is going to be interesting. Jasper says this may hurt token generation plans going forwards. Then prong 3 is about code changes, and in the last 3 months there were no changes made to the code except for maintenance bugs and vulnerabilities, and last 3 months no changes were made unless adopted through the consensus or agreement of decentralized governance system. And here it says the development team must take a back seat to the DAOs. With prong 4, there's no marketing as an investment. It doesn't get any simpler. Don't market the asset as an investment within the past 3 months. And prong 5 is rules of inflation. So it depends on who the inflation can go to. So in the last 12 months must be an end to user distribution. Government talk for an airdrop that is broadly distributed. 2 relates to the nature of the chain, and 3 is based on the holdings of another asset. So he says inflation seemingly cannot go to DAOs based on prong 5, but can be used to incentivize activity like mining or staking. And what is an affiliated person and what is a related person? Pretty much anyone who has formal connection with the foundation team or company. This is quite broad and doesn't appear that the dissolution of a company would offer any protection to the quasi-separate members. And then he says, all in all, these 5 prongs would end up classifying many popular governance tokens as securities, perhaps rightly so. The prongs are surprisingly thorough and reflect the nuance of crypto. If all assets lived up to these standards, we would see less fraud. Jasper goes on to say, I believe FIT21 is the right decision for crypto in America. Thank you. All the Dems who crossed the aisle today will be on your phone lines for the next bill. And he says, if I've misinterpreted anything, please let me know. So then he got a whole bunch of replies, but you guys can dig into that yourselves and you can explore Jasper's thread more as well. But Jasper's thread was a really good one, so definitely give it a read. Nate here says that this is not a political statement. If Trump can literally utter the word crypto and Democrats basically jump on command to rearrange their entire positioning on the topic, that should tell you something. Case studies will be written about this, political case studies, business case studies, all of it. So here James Sifat says that he's quote tweeting the thing. He says it's hilarious that Warren campaigned for being anti-crypto. Those strong anti-crypto are like 0.01% of the population. Those pro-crypto are 10% of the population. And James Sifat says it's not saying that these numbers are accurate, but I think the sentiment and view is the right way to frame what we're seeing. Basically, the idea is that no one's going to get up to vote for the Democrats for being anti-crypto, but a whole lot of people will stop voting Democrats for being anti-crypto. So it just, they lose out on the cost-benefit analysis. Okay, so that was the FIT21. Now we are going to start talking about an amazing magical day that we have today, which is May 23rd. Now Anthony Sassal has been telling you to study May 23rd for a long time. Well, it's actually happening. So today's the day where Ethereum spot ETF will be approved, and here James Sifat said it's happening. We have at least 5 of the potential Ethereum ETF issuers that have submitted their amended 19B4s in the last 25 minutes. Fidelity, VanEck, Invesco, Galaxy, ARC21 shares, and Franklin all submitted via CBOE. Now, there are a couple missing. One of them, of course, was BlackRock. So I think that's the reason why they weren't approved yesterday. This is actually from Monday on the 21st. So people started moving really quickly about getting their paperwork done. And then, we got news as well that the ETF for Bitcoin and Ethereum were approved for listing on the London Stock Exchange. They're going to be going live on May 28th, which is amazing as well. So it's just, when it happens in one place, it just starts happening everywhere. It's really cool. Eric Balcuna says that the news that Bitcoin ETFs have been approved to trade on the London Stock Exchange is true, but a few important details. Only physically backed allowed, 2 wisdom tree ones to start, and retail ban still in effect. And then there's some information if you can read about it. And then coming back to the US, yesterday then we got BlackRock to file its updated form, and then everything was ready. So here Laura says, if the ETH ETFs get approved this time, the real takeaway isn't that approval was inevitable, it's that we can make a difference. Raising our voices works, uniting works, arguing the facts works. Someone is paying attention. Maybe we didn't sway Gensler directly, but we influence someone or some group who has sway over him. Keep beating the drum and maintaining the momentum. This could be a significant turning point for gaining bipartisan support for crypto. The crypto community excels at building consensus. Let's prove it. So yeah, Eric Balcunas basically said that on May 23rd around 4 p.m. Eastern time, somewhere around that plus or minus a little bit of time, the SEC, Gary Gensler, will officially approve the ETH ETFs. And if you have a look at the price chart, it's looking pretty good right now. So we are at $3,930. If we have a look at the hourly chart, it's been pretty much, a couple of days ago on Monday, once the word broke that prices, like that the ETFs were going to be approved, the prices jumped massively, and we've not really seen any meaningful retracement since then. So that's pretty cool. I'm really happy about that. Okay, let's move on to some rocket pool news here. So Langus here made a post saying, for your information, yesterday we developed deployed the discrepancy and bug bounty fixes to testnet. We'll kick off some testing today, but feel free to unleash hell. So unleash hell. And yeah, so the problems that were found have been fixed. Everything's looking good. It's on testnet now, so you can go and start playing around with that. Of course, the Houston upgrade has been moved to June 17th, so that is where we stand right now. But thankfully, we're in a position where we've been able to get everything sorted out that we wanted to. Okay, here we have news of Myso Finance and their initial options offering. So that's going live, and you can buy this with our ETH. The way it works is you basically there's a curve, and you buy on that curve, and then if it's an option to buy basically depending on how the price goes. And here there's a comment. So he says that's an interesting mechanism of distributing a token distribution. You can borrow the Myso token against like your RETH or whatever, and it can return the loan if it goes down, but you can safely default on the loan if it goes up. So basically, if you borrow 100 Myso tokens using your RETH, for example, and the price of the Myso tokens goes up against your RETH, you can just forget about your RETH and just keep the Myso tokens. However, if the price goes down, you can return the Myso tokens and get your RETH back. So this is actually a really, really cool way of doing a token distribution. I think it's really smart. I've not taken part in it myself yet because I don't have any RETH, but it might be worth getting some RETH just to take part in this, because Myso, they seem to be doing some cool stuff, and they're actually valuing the company really low. They're starting the raise at $22 million fully diluted value, and they will cap the price increase at $55 million fully diluted value. So it's a really low market coin. Of course, it's a really niche product, so I'm not shilling it. Like, I'm not receiving any money for talking about Myso. It's just a product that's really well aligned with Rocket Pool, and a lot of Rocket Poolers like it quite a lot. Okay, next in some staking news, here we have an update from Nixo talking about who different kinds of stakers are and what it actually means. So she says, here's an extension of the ETH Staker blog I made a couple of weeks ago, nailing down what we mean by solo staker and what other kinds of stakers there are. Some of these can be mixed and matched too, e.g. you can be a home solo staker. So here, Nixo shows that there's different categories, so you can be solo, home, or remote, and these are classed as independent stakers, and then you can be managed, professional, or liquid, and then the different capital requirements that come with that. So for solo, it's a multiple of 32. With a home staker, you can be 32 or the protocol minimum. With remote, it can be the same. It can be 32 ETH or the protocol minimum. With managed, it can be 32 or protocol minimum as well. And with professional, it can be delegated, and with liquid, it can be any amount. Then where, with solo, it doesn't matter. You can be at home, you can be hosted, commercial, it doesn't make a difference. With home stakers, that is for people who are actually staking from home, so that's residential. Remote can be commercial, managed can be commercial, and with professional liquid, it doesn't matter. And then who controls the configuration, right? So with solo, home, remote, and professional, the user themselves controls it. But with managed and liquid, then it's out of their hands. It's up to the other people who are doing that. And then there's some examples of what the different types are as well. So this was a really nice little informative chart to tell you about the different kinds of stakers there are out there. Nixo also put out this vocabulary document where she explains that offline penalty is when your node is offline. The punishments are very minor. You only lose a couple of dollars a day. With an activity leak, this is when there's a network-wide issue. It can be increasingly severe for affected validators. It's happened once. This is when, there's a bug in a client and 20% of validation goes down or something. Then you can get punished a little bit more than just being regularly offline. And there's slashing as well, which is a penalty for malicious behavior, double signing. You lose 1 ETH. So yeah, you can lose 1 ETH with that. So that's not fun for anyone. So definitely keep those things in mind if you want to become a staker. Like Nixo says, the offline penalty, which people confuse for slashing, is actually very minor. Like Nixo says, you only lose a few dollars a day, and you make it back really quickly. So it's not a problem. Okay, moving on to some Ethereum news. Here we had news from Dan Romero, of course, who is the founder of Farcaster, and they've got a new raise that they're letting people know about. So since going permissionless last October, Farcaster has seen 350,000 paid people sign up, which is a 50x increase in network activity. So they are talking about a new fundraising round, which was led by Paradigm with participation from A16Z Crypto and a bunch of others. So they've raised $150 million. So they're focused on two things for the rest of the year: growing daily active users and adding the developer primitives to the protocol, like channels and direct messaging. So, and they're also hiring engineers. So if you are interested in that, they've got a whole lot of money now to spend on growth. So congratulations to Farcaster for that raise. I use Farcaster every day to post Rocket Fuel episodes mostly, but it's cool. Like, I really hope it continues growing and gets better every day. Okay, next we've got news from CowSwap, and they've got a new design coming out that they're hyping up over here. So they say a new proposal on the Cow DAO forum suggests accelerating the development of the Cow AMMs through a strategic partnership between CowSwap and Balancer. And then you can read the article, but what they're saying is they're doing there's some problems they've identified in DeFi with the way that AMMs are currently set up, and they want to fix this, and CowSwaps, they work by giving Cow protocol solvers privileged access to trade against their liquidity pools. The solver that offers the most surplus wins the right to rebalance the pool, capturing arbitrage value for LPs and shielding it from MEV bots. So it launched 3 months ago, and they have outperformed reference pools and also generated actual money in returns. And they, saying that with Balancer, who are experts in setting up AMM designs, they think this is going to be really good. So if you're interested in getting some more information about this, you can follow the links and read more about it. But I love CowSwap. It's my favorite exchange, and it's the one that I use more than any other. So definitely check it out. Okay, a couple of days ago I talked about Taiko airdrop. Well, the moment's arrived where you can claim your airdrop. I don't know if the token generation event has happened yet, but it says the moment this year that you've been waiting for, the Taiko token airdrop is here. Check your airdrop eligibility. So it says season 1 or phase 1 of the airdrop season offers substantial 5% of the initial token TKO, token supply for claiming, and check your eligibility. Sadly, this eligibility wasn't as so this is just to check your eligibility. You have 7 days to check it, and then you'll have 1 month to claim your actual TKO token after that happens. But disappointingly, they were actually quite, well, maybe not for them, but they were quite narrow with how they distributed the token. Most of it went to people who were working on their testnet, which is totally fair, but some of it actually went to their people who use the Galaxy quests to basically farm. It's a shame that none of it went to like other layer 2 users like Celestia did, or to stakers like Stark did. But hey, like, good job for Taiko. If you want to read about their airdrop, here they tell you about the eligibility in this claim website, and it said, what do I have to do to qualify for this airdrop? And they tell you block proposers, block proving, interacting with our testnets, participating in Galaxy campaigns, getting contributions on eligible repositories, and Ethereum ICO participants who transacted between the 2nd of January 2022 and 2nd of January this year on mainnet. So that's the group of people who are eligible, but it looks like they're going to do more. So if you want to start using Taiko, definitely go ahead and do that. Like I was saying on Monday, Taiko is one of the L2s that I'm actually really excited for. I think they're doing some really cool stuff from a technological perspective. So like, whether I got an airdrop or not, I'm probably going to start using it once it's live on mainnet. Okay, here we've got a really great post from AJ Warner talking about the impact of 4844 on layer 2s, and here they said that the long form post on post 4844 margins, throughput and congestion pricing. In my opinion, this is absolutely critical discussion for the Arbitrum DAO and the industry in general. So they're saying that Arbitrum is charging 10 times less than its peers because it's in congestion least frequently, despite yesterday's administration consuming the most gas per second and having the most transactions per second. This gap will increase if Stylus goes live, and a higher percentage of the transaction take advantage of those computational cost savings. So AJ goes in this thread and kind of explains about how like Arbitrum is using 7 million gas per second, Base using 5 million gas per second, Hopium Mainnet is using 2.5 million gas per second, but the amount that they're using is more as well. So Arbitrum uses 5.6 million per second, Base uses 5 million per second, and Hopium Mainnet is using 2.5 million per second. So Base and Hopium Mainnet seem to be gas constrained, like they're hitting congestion amounts, whereas Arbitrum is still working within that boundary. So the impact is like gas per transaction varies, but yesterday count and then giving some information. So it says in essence Arbitrum is doing 10 times more transactions than Base and around 3.5 times Hopium Mainnet, but when you look at on-chain revenue, it's a completely different picture. So Arbitrum is making $29,000 per day, Base is making $300,000 per day, and Hopium Mainnet is making $79,000 a day. So it's 10 times cheaper to use Arbitrum than its peers. And AJ says, my impression is that user developers in the market are comfortable with these fees being charged by OP and Base. I think it's worth the Arbitrum DAO exploring the relationship between gas fee sensitivity to transactions and users, and explore if there's an optimal pricing structure for the network. With Stylus being available shortly, the most expensive resource computation is about to get way cheaper than Arbitrum. I'm curious if the DAO's strategy to explore the balance between protocol revenue and providing the best user experience. So I guess what AJ is arguing is if they hit that congestion amount a little bit more, they'll massively increase their fees, and also like the degradation for the users might not be that much. Okay, so as ETH price moves, a whole lot of people are talking about this Eth Beta play. Now the Eth Beta play is this idea that if you trade into tokens in the Ethereum ecosystem, some of them will move more than Ethereum over certain time periods, and the idea is that if if ETH is going up in price, then the Eth Beta play tokens will go up higher than that. So Was here kind of put that theory to like the test and saw that it's not looking so good. So here is a chart that follows the OP ETH ratio, Lido ETH ratio, and Arbitrum token ETH ratio since January of this year, and basically they're all down bad. Like OP is down 50% against ETH, Lido is down 57% against ETH, and Arbitrum is down 62% against ETH. Of course, RPL is down bad against ETH as well, but it's not on this list, and that's traditionally seen as an ETH beta play as well. Now that ETH is starting to move up a lot, like ETH, during that time has kind of had a few little pumps and then has been kind of flat to slightly downwards in that period. But now that ETH is kind of moving up, it's going to be interesting to see if the beta play theory comes to pass. But please be careful swapping your ETH into other tokens. It's risky. It's really, really risky. Okay, so Benjamin Cowan has been talking about Ethereum losing against Bitcoin for the last 2 years, pretty much since before the merge even. And he had this theory that in bull markets everything leads back to Bitcoin, and Ethereum is no different, and it might have held up well so far, but the time of it holding up well is over very soon, or if it's already over. And the idea basically he's saying is that ETH was going to go back home, which was going to be the 0.03 to 0.04 ratio against Bitcoin. And of course, we've not gone that low since the highs of the previous bull market are like 0.088. So he's been saying this for a long time, and he's been saying that the ETF doesn't matter, this is just what prices do, etc., etc. And we're not in a new paradigm, this is just how crypto works. Well, even as recently as last week, he was putting out videos saying that ETH is going back down to like 0.03 to 0.04 range, and he was expecting Bitcoin to have some kind of retracement as well. And he was saying that ETH could go down to like the low 1,000 amount basically. Anyway, he put out a tweet yesterday saying, I did not anticipate such a huge reversal by the SEC with regards to the spot ETH ETF. Also, one could argue that we can always find a reason to explain why we get things wrong. So to blame it on the ETF is coping. This is a big L for me, but what else is new? So actually, I'm really impressed by Benjamin Cowan, just coming out and accepting this. He's gotten a lot of stake from people in ETH. Every time there'd be any kind of pump, they would ridicule him basically, and for rightly or wrongly, however you want to argue that. But his analysis actually, like, I think was flawed, but I still hate watched his show, like especially the Ethereum episodes. But for him to actually come out and say here that he made a mistake and he was wrong, I think is commendable, because a lot of other people in his position would have tried to make an excuse and explain it away and kind of like take the pressure off themselves. But he totally owned it. So good for you, Benjamin. Okay, so there's this question about this ETH ETF that's coming, and who is actually going to go out and buy ETH on these ETF markets. Like some of the more traditional, like Bloomberg analyst guys, say that the flows for ETH are going to be quite low. Bitcoin maxis are kind of coping by saying the flows are going to be negative, because they think that the Grayscale's ETH is going to leak their assets under management, and the flows are going to be negative, and there's not going to be enough people buying the ETFs from other providers. So you're going to leak. But here Evan has a really great a post. He says, TradFi won't buy ETH, it's too complicated, these guys are conservatives, they don't understand it. And then he gets a bunch of quotes from people like Big Fish and TradFi. So Ken Griffin says Ethereum will replace Bitcoin. Carl Ican, sorry, I don't know how to pronounce that, prefers Ethereum over Bitcoin. It's a store of value and a payment system. Stanley Druckenmiller says predicts Ethereum might eventually dominate Bitcoin. Ray Dalio owns Bitcoin and ETH and believes crypto has a place in portfolios. Jamie Dimon calls Bitcoin the pet rock, but believes ETH has use cases. Paul Tudor Jones calls ETH an digital asset, the fourth industrial revolution. Heaps of protocols have developed that interact with the real world traditional companies. And Larry Fink says it's about tokenization, talks of putting the financial system on decentralized ledger. He says the TradFi key opinion leaders like Ethereum, TradFi loves to follow the herd. Small potatoes, question mark. So, and then he brought the receipts with all the sources and like all the quotes. And then, yeah, so I think there's markets that will develop. One of the conversations I was having a few days ago, in this very topic was, what kind of narratives are these guys going to use to sell it to their customers? You have to remember that these guys are used to selling assets in the billions of dollars, like trillions of dollars, basically. They will find the marketing that will work for their customers. Whether they go with Ethereum is oil or ultrasound money, store of value stuff, whatever they use, the world computer kind of stuff, all these narratives that people have thrown around over the years, I'm sure that they're going to pick something and they're going to coalesce around that marketing, whether that's tokenization, whether that's real world assets, whether that's new paradigm kind of language. Whatever they end up doing, I think is going to be really interesting to see, and I'm actually really curious to see how it's going to work out. But I think people who are saying that this is not going to work are maybe just coping a little bit, and we're starting to see the beginning of the volcano. Okay, moving on to some other news now. I really like this news. So yesterday, of course, was Bitcoin Pizza Day, and Coinbase were out in New York promoting it. So they said Coinbase said this Bitcoin Pizza Day was celebrating how far crypto has come since 2010, helping create a cheaper, faster system. So it says, welcome to the Coinbase Pizza Truck. And what's really funny about the Coinbase Pizza Truck is, of course, they're selling Bitcoin pizza, celebrating Bitcoin's Pizza Day. But how are they accepting payments? By USDC on Ethereum using Base. So I think Coinbase were giving out dollars on people signing up for their wallets, and then they were showing them how to use Base, basically use USDC on Base to pay for pizza. So Ryan Beckermans was kind of celebrating the irony of that and saying we are in a new age of Ethereum, and that is really exciting. Okay, talking about Metamask. Here we have a report from Bankless saying Metamask is reportedly adding native Bitcoin support. So if you want to use your wallet, you'll be able to start using BTC on Metamask. And they might go beyond that as well with integrating additional Bitcoin token offerings like ordinals and runes. Could be a significant catalyst to Bitcoin, because Metamask boasts 30 million active users per month, which is a whole lot of people. But yeah, that's coming. If you have Bitcoin, you can store it on your Metamask, I guess. Okay, I'm going to share some hopium with you guys because it's kind of fun to think about that stuff these last few days. Of course, this is not financial advice or trading advice, but here B Smoke says the amount of ETH reserved in exchanges is at an all-time low, just 14 million ETH, which is 11.6% of the circulating supply, is available on exchanges. So the price is going up, but the amount of ETH on exchanges is going down. That, of course, is because people can actually do things on chain with ETH. There's no need to leave it on exchange. Also, people have seen, their crypto getting burned on exchanges like FTX and others. So people are taking, self-custody of their crypto more. But people still, go to these exchanges to buy their actual crypto. And the fact of the matter is that there's a supply shock coming. Let's see, we've got some more thoughts on this. Waz here says just because the centralized exchanges are suffering, that doesn't mean that the decentralized ones aren't. So he says you can see how offside the market is on ETH just by the liquidity depth of some of these pools. So if you have a look right here in the middle, so this is wrapped ETH versus USDC. The price was 3,600, but on the buy side, there's very little liquidity available compared to the sell side, where the price could move very quickly. So when you start putting these ideas together, that there's no ETH on exchanges, there's no ETH on markets available, liquidity is really low on the buy side. That together can put like a really nice recipe. And let's have, I just want to look at the ETH chart one more time because it's so beautiful to look at right now. So I'm going to share that with you guys. So it was, it's actually come down a little bit. So it went up to 3,950 and now it's down to 3,850, but that's okay. Like that's not that big a deal. We'll see how those movements work in a little while. But Watcher Guru here says, Bernstein, which is a $725 billion asset manager, says ETH will reach $6,600 after spot Ethereum ETF's approval. So it might be a fun few days ahead for us, after we get the approval in around 8 hours time. And Van Spencer here says as well, he kind of explains it, he says, the ETH thesis has always been that there is far lower supply of ETH than the market realizes due to years of burn, ETH in staking / restaking, and ETH locked in DeFi and contracts, NFTs, etc. He says, and this supply is in balance will manifest when demand shock hits. A jump in ETH demand would be the catalyst to reflexively push the ecosystem into overdrive. More fees, more staking, less ETH supply, more flows. So he says, combined with nearly 2 years of ETH BTC down only, has left the market participants solely offside on ETH and out of position for any sustained run. With the Bloomberg boys setting inflow expectations at modest 10% of BTC, you are about to see a world-class level of coping. And he says L1 KPIs are moving target, but Ethereum is the cash flow king of crypto, and more importantly, only one KPI really matters, having a US listed spot ETF. So that is pretty awesome as well. And then the last thing today is here, Liam shares an image. He says live footage of Anthony Sassal coming back to eradicate the ETH bears, and this is the return of the ETH, the return of the king. And there's a picture of Sassano over a Lord of the Rings poster. And today is, of course, the day where Anthony Sassano returns from his hiatus. I'm absolutely excited to have him back. And of course, with that, today is probably one of the last days where I cover Ethereum news to the extent that I do. I'll be going back to focusing on Rocket Pool news and only covering wider news where it directly impacts Rocket Pool or indirectly impacts Rocket Pool. But it's been an absolute pleasure sharing Ethereum news with you guys for this last few weeks. And thank you everyone who's been watching, listening, and being part of this Rocket Fuel community. I'm going to keep making these episodes come rain or shine. So I'll see you in the next one. Bye.